Hello, Richard Wilson here, coming to you from Tbilisi in the country of Georgia in the Middle East, and I want to do a quick video on debt and why I think it's going to continue to grow as an investor option. I think that many times investors go into deals as LP equity, or they invest in operating businesses and get on the cap table. But as investors become more sophisticated, as the family office industry matures, there's several reasons why debt is going to continue to grow. One is that I think that a lot of retirees and baby boomers like consistent income coming in that's backed by hard collateral. When you compare that to things where there is no collateral, you compare that to inconsistent dividends and not knowing if you're going to be getting any income out, to the mass affluent baby boomers, debt is very appealing in that way. And I think that more real estate and private equity investment managers are going to realize, oh, okay, well, my investors really just want an 8% per year or 12% per year return, whatever it might be for your targeted investor type. And anything I produce above that, I get to keep if I'm giving them that consistent return and have that backed by collateral and have their return go up if I miss a payment by a month or two and don't catch up with that and whatever you put into your agreement. So that's one big reason why debt's going to increase, is that baby boomers are going to increasingly like having debt investments, and investment managers are going to increasingly offer it because it allows them to hold more equity in the asset at the end of the day once the debt note is paid off, whether that's over 7, 10, or 20 years. Another reason why debt is increasing right now, short term, is just the economic cycle has been positive for so long that a lot of smart players are saying, well, we're very choosy and selective on what investments we're doing, but we will still do several debt investments as long as the collateral is excellent, because worst case scenario, we wait it out or we're able to collect on that asset. That's a reason. Another reason is that I just think a lot of family offices, once they get highly formalized and professionalized, realize they're overweighted on equity and underweighted on debt. And that could be in private equity, it could be in real estate. And I just find that once somebody gets really experienced in making LP equity investments, they find interesting, more sophisticated, potentially complicated, but sometimes less risky for the return investments on the debt side that you can only really do and sometimes get the deal flow for once you have made investments and built your network on the equity LP side. So for those reasons, I just see the future of debt in the family office industry and investment management growing. I'm pretty confident on that from the relationships we have, with the several dozen $100 million plus families we've signed as clients over the last decade, and the 120 conferences that we've put on in the family office space through the Family Office Club. It's a trend that I'm seeing confirmed all the time. So to learn more about our work, please visit centamillionaires.com or familyoffices.com. Thank you.